everyone, I'm Chris Hooten, and I wanted to share some info about the financial power of refinancing, okay? I'm sure a lot of you have heard that interest rates are near historic lows, and that is absolutely true, but I don't think you have really let it sink in as to how big of an impact being smart about your mortgage can have on your finances. So I'm going to give you a real life story that I just discussed this with a client yesterday. Now, she's been in her house for 4 years, so she has 26 years left on her mortgage. She has roughly about $240,000. Okay, so we looked at a couple of different scenarios. Obviously, she wants to lower her interest rate. She's at a 4%, interest rate, which is not bad at all. It's actually very good. But fortunately, rates are lower than that right now. So we looked at a couple of options. Obviously, one was refinancing to a new 30-year. By the way, she was also wanting to get rid of the mortgage insurance that she had on there. So we looked at that option. Obviously, that dropped her payment pretty significantly. But I also suggested that she looked at shortening the term of the mortgage. And we ran some numbers. And this is what we ended up deciding to do. So she has 26 years left on her mortgage. We dropped that down to a 20-year term. We took her interest rate from 4% to 3%. And meanwhile, even by dropping the term to a 20-year loan, because we're getting rid of the mortgage insurance, she was still going to be saving $100 a month. So her mortgage payment went down. She knocked 6 years off her repayment. If she stays in that house for the full 20 years, which she may not, who knows? But if she does, she's going to save just over $90,000 in interest. Guys, that number is huge. $90,000 that she would have paid to the mortgage company that's going to go back into her finances, building wealth for her family. So guys, something as simple as that, you might think, I've got an okay interest rate, I'm not too worried about it. Or you don't maybe want to refinance back to a 30-year when you've already paid down several years. There's lots of options out there that make sense in this rate environment. I've heard lots of reasons why people don't want to refinance, but they don't really take time to look at the numbers. Because if you look at that, got rid of mortgage insurance, saving $100 a month from her current payment, and over the life of the loan, she'll save a little over $90,000 in interest payments. Guys, that is, I thought it was remarkable. I wanted to share it with you. I know when I ran the numbers for her, she was like, "Oh my God, why didn't I think about doing this before?" The good news is, guys, rates are really, really low right now. We do not know where they're going. Obviously, if you're a human and have been paying attention, you know how crazy the world is right now. We do not know how that's going to affect interest rates. They could stay very low for a long time, or they could go up. We don't know. All we do know is what's happening now, and now is the time to take advantage of these low rates, whether it's doing what I just described that this young lady did. Maybe you want to pull cash out because you're doing home improvements because you're going to sell your house in a year or two. Maybe you want to consolidate debt, and low mortgage interest is a much better way to pay off that debt than to pay your high interest rate credit cards, month after month after month. If it's just getting rid of the mortgage insurance that you have on your existing loan, that could save you thousands of dollars over a short period of time. Or maybe it's just, I want to lower my interest rate to get my payment down because, hey, we're going through this crazy COVID thing. Our finances are a little bit unstable, and we would be more comfortable with a lower payment. There's lots of reasons, and they all make economic sense. It really just depends on your situation. So please reach out to me with any questions. I would love to help you. My name is Chris Hooten, and I am your MLO.